Are there signs of a near-term peak in stocks? All that and more on today's Sunday Night Charts. We take a look at the charts to help you with the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me today. As always, a moving averages colors on your screen. 21 days red, 50 days in green, 100 days in blue, 200 days in tan. Price versus momentum. Price is a general direction. Prices are heading. Momentum is a rate of change. A bullish indicator for both is positive. A bearish indicator for both is negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance is a level buyers can't break, and support is a level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time of trade, and provide direction to the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. We head over to the S&P 500, symbol SPY, and boy, we went from some red to quite a bit of green as stocks moved higher last week, as investors were more bullish. And clearly we see the 21-day moving average, 50-day moving average now turning higher, price rising, momentum on those both moving higher means the rate of change of their price moves rising, now back above all the key moving averages. Above all the trend, longer term trend momentum signals are out positive. And let's take a look to see, is this potentially a peak? Now remember, we've got the volume profile turn on. You can do this with your charting software. We'll start on the 10-day, and you can see here over the last 10 days, most of the shares traded here at 452. In the past, you would kind of like to look at this as an area of support, and what this is telling us to me is that we're looking more of an area of resistance, as when price gets up here, the sellers come in and sell. So looks to me as a near-term peak. And what does that mean for price? Maybe a move back down here to 443, maybe into 447. Let's zoom out. That was a 30-day. We'll go to the 90-day chart. And, there's not a lot of danger here. If you're bullish on the equity market and you're looking for where buyers and sellers are at, you can see there's a ton of support on 90-day at 434. And there's all kinds of support in the middle of here at around 440. So is there a lot to worry about? Not at all. And then you can zoom out on the 6-month chart. There you see it, 440. Lots of support. Potential near-term double top. Sellers were here before. Sellers appear to be here now. And that could see, again, prices falling down into the 446, maybe as low as 440. Although it's been difficult for prices to get down there and stay down there. But maybe tech stocks give us a little bit of a different picture, and let's see what's going on there, because all of a sudden we see the same story here in the QQQ. Price turning higher on the 21 and 50 day. The rate of change, the rate of that move higher is expanding, so momentum is rising, so that's bullish above all the key moving average, other than 1 month momentum, which is negative and rising. Not a major indicator there in terms of trend changes. And what it looks like to me is the Qs are okay. And certain enough, they're coming up and finding a little bit of resistance here on the 6-month chart. Plenty of support, same zone as we saw with the S&P 500 sitting here at 365. But let's zoom in on the 10-day. And now you start to see what I was looking at on SPY is that over the 10-day period, that volume profile line is acting as resistance for tech stocks. It looks like on SPY is support, but I have a hunch it's going to follow the tech market lower. So where does that put your tech stocks likely direction? A little bit lower, maybe even down into this 370 range. I mean, there's not a ton of danger here. A similar setup to the S&P 500, but a lot of volume here sitting at 365. A lot of people want to buy stocks at these high prices, and they're showing it. They're not just saying it, they're showing it with their purchases. So let's move on to the small caps, because that will help us determine, again, is the broad equity market likely to head higher, or are we in stall zone again because small caps won't participate? And on what do we have on the Russell? Now we see the rate of growth on the 21-day moving average rising faster, bullish. 50-day moving average slowing, so that's a little bit bearish on momentum. Above all key moving average, now you see 1 and 6-month momentum turning positive and rising, so good indicators here. So we're seeing some strength in the moving averages and momentum indicators that, hey, there's something potentially good going on with the small caps. And let's head over to IWM. And what do we see? Literally just the completely same story we've been seeing for months and months, and the 6 months or more. And what is it? Gets up here into the sell zone, and what does it find? Sellers. And again, it came down to the buy zone. And buyers stepped up, and just right into the sell zone. Every time it gets up here, there's sellers. There's lots of support. There's just a very clear battleground on the 1 year chart between the buyers and sellers. If we go to the 6-month chart, they're still in the same zone. So right now, the ball in the court for small caps is in the sellers. Sellers on small caps are telling us that those big caps, the QQQ, the SPY, probably not grinding higher unless these small caps break out next week. And so far, you have to say that this is a bearish turn now coming, because this is where sellers have been. So the buyers really need to step up and drive that move higher if they want to see a breakout in the major indices. How about we move on to the transportation sector, which once not long ago was fairly showing some red. Now got quite a bit of green as the rate of change in the 50-day moving average moves faster. Momentum rising above all key moving averages. 3-month momentum now positive and rising. So these are good signs. I mean, you're looking at these momentum trends and you say, hey, this is good stuff to look at. And where are we at on IYT? Let's go up here. And wow, all of a sudden that volume profile line on the 6 months held, very clearly establishing there are buyers here. So now the only question is, where does this go? Well, on a 90-day chart, it gives us no indication. Let's move out to the 1 year chart, and it's likely to start finding resistance up here in the 270 to 271. So transportation stocks, which were leading the market lower, came rallying back. Perhaps this is what you're seeing in the S&P 500, is this move higher in transportation stocks. The question is, can they keep that momentum going? Again, they've got a bit higher move, so I would say that you're looking, again, this 270 to 271 range is where they're likely pushing into. Got a bunch of support. So you now know exactly where the buyers are at. The only next question is, where are the sellers? And I think we'll find that out pretty early on into next week. So that would be a bullish case for the S&P 500 in the short term. But the question is, what about the rest of those 500 stocks? How about the energy sector? Bullish across the board. One thing we've learned is when all these indicators go green, it might be at the top. I mean, you could be. I mean, if you've seen a move higher, and we have, and let's start with crude. Where's crude oil? Here it is. Definitely nice support moving up to, I think we're around 68 a barrel here, sitting at 84. Let's zoom out to the 1 year chart. Still strong support in the 60s for price. You can see the volume profile line. 2 year chart, I mean, plenty of support at 41. Let's go to the 5 year chart, and we still can't find where prices were last. Let's go to the 10-year weekly, and we're starting to get kind of where I thought prices would start to run out of steam, and we're going to have to go back to the max weekly here. Let's zoom this thing way out, and you can see there's a lot of resistance coming in this $84 price range. How do you know? Because there were previous buyers here that may now be trapped in their positions and want to sell. So the question is, are these buyers from way back in 2011 unlikely a factor now? Or if they did buy and did hold because they got caught in this move down, are they turning to sellers now? So they're seeing a lot of overhead resistance here in crude, which tells me that perhaps we're seeing the end of this move in crude, which would again support perhaps a lower move in the broad equity market. How about XLE? Now, this is very interesting. I have not looked at this chart until now, but when we turn on the max weekly, look at where the volume profile line is at 57. So the most shares on XLE on the max weekly chart exchange hands right where they're at now. So that means all these people that bought above here, that bought these dips down here, may be turning into sellers. They may have been trapped in their positions as they got washed out, and they may look to sell. And that's one of the key things about where you see these dips turning into selling, where you're seeing what was support turning into resistance, is support being, hey, if you bought here and got wiped out on this move and now you're back even, you may turn into a seller or partial seller. And that's real key. Look at the 6-month chart. There's plenty of support below. But now all of a sudden, this is putting, in my view, some concern that perhaps we're seeing a peak in XLE. So you look at the 2-year chart, you can see it's coming up to resistance there. Let's go back to let's look at the 5-year chart. You see a nice amount of resistance. So again, if you look at here, you see all these sellers going back to December 2018 and buyers December 2018. August 2019, October 2019. They bought these dips thinking this is going up, and then they got wiped out. Well, guess what? Price is right back there. Are they going to become sellers? That is a question. So now I'm thinking kind of a bearish picture for XLE based on that, which would be interesting because, again, that kind of adds to the narrative that the S&P 500 could see a short-term move lower. How about financials? All green across the board. These things are breaking out as everyone is betting on a massive flood of lending from the banks. Doesn't really seem to be happening, but people are betting on it as financials go to all-time highs. Meanwhile, banks buying a ton of bonds and their shares back. So that's helping as well. But in terms of banks' balance sheets, what are we seeing? The big driver of those being they're reducing their loan loss reserves. So definitely not bullish in terms of lending growth, but bullish in terms of balance sheet manipulation for sure. How about industrials? XLI, we see price and momentum now turning bullish on the 21 days. Prices rise, momentum increases above all key moving averages. 1 and 3 month momentum are now positive, rising. So, you see this move last week in the equity markets brought everybody higher. And now we're crashing into the 6-month volume profile line. It broke through it. It's running into potential resistance. So if you're looking at XLI and you're bullish, you really need this thing to break out because you're smack dab in the top of this zone. And if we drew some lines up here, say around 105, let's just say, 105. And on the low side, you can draw them down here at 101. This is a sell zone at the moment because this is where sellers have been. So for the moment, we'll say this volume is still sellers. The buyers came in at the 200-day moving average and held it. But in terms of breakout, it's kind of looking more like IWM going sideways than it is breaking out to new highs. How about the utility sector? 21-day moving average price now rising. 100-day moving average price rising. Good signs back above the 50 and 100-day moving average. Good. 3-month momentum positive and rising. 6-month negative and rising. So all good signs there for the utility sector, which hit pretty hard resistance and bounced. Remember, it came down there. And let's see, 1, 2, 3, 4, 5. It ran into resistance. We kind of thought last week this was going to roll over. And the bulls just, crushing volatility took the utility sector higher. And we'll probably be running into resistance pretty soon. Let's zoom out over the 5-year chart. And you've seen sellers right here at the 67, 68 range. So yeah, maybe it pushes up here to 69, but you're going to see sellers have been up in this zone. So look for sellers to step in and put an end to the rally in utilities. But again, there's plenty of volume support underneath there. How about large gold miners? GDX price momentum on 21-day flipping bullish. 50-day price or momentum now increasing at a faster rate. That's bullish. No change on the moving averages. 1-month momentum positive and rising. So some early good signs for GDX here. Let's take a look. And it's trying to hold this volume profile line, but it keeps getting rejected here. And that's one of the things that you have to take into account is when price continues to get rejected. Here on the 1-year chart, you can see 34.85. Sellers are clearly up here. And so every time price goes down a little bit lower, buyers say, finally, this is it. And they drive prices up, and sellers are waiting for them. And then drive prices up, sellers are waiting for them. So can I get real excited about the mining stocks at this point? Not so much. I mean, there's on the 90-day chart, you've got some definite support here over the last 3 months. Let's look at 30 days. You've definitely got support here. How about the last 10 days? You've got some support here. But beyond that, I mean, it seems to me more likely this rejection comes down and needs to kind of work through this zone of trading. And so to me, short term, you come down. Maybe, if it holds here, then you get another run back up into the $34 range. Maybe as low on the downside in the 30s, but there's a lot of volume here, so there's still a lot of buyers holding. But we'll take a look at gold here in a moment and see what we think. So I say short term, I'm bearish on that. How about emerging markets? We look at EEM, 21-day price momentum turning higher, 50-day momentum price rising. Good signs, 1-month momentum negative and rising. So what do we see with EEM? Ouch, right into that volume profile line at 6-month trend. Look at that. Bam, just gets up there, rejected. Gets in that zone, rejected. Gets up there, rejected. So what are the probabilities EEM is going to get rejected here? probably pretty strong. And then above that, you have more sellers. So the trend for EEM is definitely going to be to the downside. Not really what you want to hear if you're bullish on the metals or the miners. How about the high yield bond market? Things are breaking down here. That would be a red flag for the broad equity market. Now below all the key moving averages, price trending lower on all the moving averages. 1 month through 9 month momentum negative and rising. So there's some positivity there. Let's see where prices are at on HYG and see if the bulls did not. So this is something you want to look at. Is high yield bonds tend to lead the equity market or move with it. They lead it to the downside. I'm not sure about I don't think they lead it to the upside. But when you see an upside move in the broad equity market and is not being followed through in the high yield bond market, that should be a red flag. And did you see what we just switched here? The 6 month volume profile. Clearly sellers at 88. Switch to the 1 year. So over the last 12 months, sellers are at 87. And now let's go out to the 2 year chart. Sellers above. So what do you see? There's all these people buying junk bonds up here, and the sellers are just unloading as fast as they can get into this buying strength. So right from a chart perspective, this is indeed bearish for high yield bonds, and that is dangerous for equities. Absolutely dangerous. 90 day, you see the volume profile above. 30 days, you see it above. 10 days, you see it above. There's your move to the downside. High yield bonds, keep an eye on that. Maybe the highest conviction piece we've looked at so far. How about treasuries? Of course, we know Bond King loves the bond market. And 50-day moving average momentum now starting to pick up some steam. Below all the key moving averages, is fighting to get above them, but keeps getting knocked back below. 1 month, 9 month momentum negative and rising. 12 month negative and falling. Is this it? Is bonds finally over? Is everyone going to finally say the Bond King was wrong and get their wish that we get higher interest rates, which they really actually don't want, but they think they do? Here's your rising trend line on TLT. Tagged it. Price bouncing off that. Plenty of volume support underneath TLT. Let's look at the 6 month range. We know sellers were above that. And in the past, this has been acting as a magnet for prices. Over the last 90 days, price was still in that same zone. You can see this nice tag of the trend line there. So this would tell me that TLT is likely to make another run back at this 140, high 145, 146 price point. Looking at the 30 days, it's starting to hold there. So again, you look at these volume profile. What is this telling you? When price gets below, it comes as a magnet back up, and that's telling you there are buyers here. They're buying these dips very clearly, and that is a bullish view. So there's your 10-day volume profile acting like a magnet higher. So it tells me for sure, at least in the short term, that price for TLT is likely to head higher, not lower. All right, let's move on to gold futures. Price momentum on 21-day turning higher, rising. That's good. 50-day moving average price on the 50-day now rising. We see it's above its 50 and 100-day moving average. I mean, look at these momentum screens at the bottom. 1 month momentum positive rising, 3, 6, 9 now negative and rising. These are good. You want to see the the belly of these momentum signals. At 12, the 1 and 12 month aren't that critical, but the 3 to 9 month, that's what you want to see. So let's see, is gold finally going to break out? Or are the mining stocks suggesting otherwise? And once again, we see the same problem. It gets up into this 1800 to 1820 range selling. And it's very clear that this is a sell zone. And you can see where they're starting to sell is right here at 1785 and higher. Buyers are right below at 1750 and under. And this is definitely not a bullish picture for gold. And you see the 1 year volume profile sitting right here telling you the sellers are clearly above this line. And so again, not a bullish picture. I mean, looking at the 2 year, you see the same story. Look at all that volume trading right here. Everybody that wants to sell is unloading gold at 1800 as much as they can. And speculators are buying it like crazy. Looking at 90 days, you see it's right here. Same spot. It's telling you where the sellers are at. It's very, very clear. Now the buyers are below, see 1758, we see that, and on the 10-day, so you see it below. So as far as this looks from a position of what we see in gold, could there be some moves higher going into the first part of the week? Sure, but you can tell they're getting rejected here. They're clearly getting sold at 1800, Whoever's got gold wants to sell there. The speculators, the question is, can they outpower all of those sellers? How about we look at silver? Similar story on silver now. Price is moving higher on 21 and 50 day. Momentum on the 50 day is rising. That is good. Everything else pretty much unchanged. There is 6-month momentum, negative and rising. That's usually a plus. Let's take a look at the silver futures and see what we see here. So price, you see there are most of the sellers are up here at 26, that providing perhaps some upward mobility to silver. But let's look at the 1-year chart. Maybe I'll go to the 2-year. And what do we see? This has been a zone of buyers before. This is right in this 24 to say almost $25 price range. But what's happened is it's turned into sellers. So remember, price came down below, came up. Sellers said, okay, I've been buying these dips and didn't work out, so I'm selling. Then they came back in and bought it back up. Now the only question is, and you see it's downtrending 100-day moving average, is this still a sell zone? If it is, well, then all these people that were long are starting to exit their positions, and that still tells you the direction for silver in my book remains down to 18. But there is some shares, there is some volume above suggesting there could be a move higher. You see if we flip through these. So there's definitely a potential you could see silver kind of race up into this $26 price range, but it's been pretty clear in the past that's where it gets rejected at. And how about King Dollar? Here we go, symbol DXY, bullish cross price and momentum. 20 now below a 21-day moving average, 12-month momentum negative and falling. Is the dollar done for? I mean, everyone's rooting for it. I don't know why, because most people watching the show transact in dollars, so it doesn't make any sense to me. But it's holding support here at 93.61, 50-day moving average below, so could see a move down in the dollar to its moving average. Looking at a 2-year chart, you can see it's pretty clear this is a bottoming pattern. Let's go to UUP where we can pick up some volume profile, and on the 2-year chart we can see that most of the shares over 2 years are traded here, confirming this is a bottom. So moves down will be bought. You can see that happening there. You can see the 1-year chart that it could dip down here below. There's plenty of support at 25 on UU, or below, just below 25, 24.90 on that. Let's go to the 90-day chart and see their support below. So again, you can see easily make the case for a short move down in the dollar. Here it is at 25 on the 30-day chart. So very clear to see 10-day magnet above. So the dollar still bullish, still a bottoming pattern. And you can see that. We'll zoom back out to the 2-year chart. Very clear. See that bottoming pattern here. You can see it in DXY where I've got those lines. That remains the biggest risk to high yield bonds, equities, energy stocks, and everything else. And with that, we'll wrap up today's show. See you back on Monday. I'm your host, Steven Van Metre. Thanks for watching. Bye now. The content of this video is provides educational information only, not intended to provide investment or other advice. This video is not to be construed as recognition or solicitation by a scary financial instrument or participate in particular trading strategies. This video was prepared by Steven Van Metre on personal capacity. Business expressed in this video that do not reflect the valid financial advice, Inc. or Steven Van Metre Financial.